Hello, this is Mr. Chris. Recently, I made the decision to start moving away from funds that distribute dividends on a monthly basis. And the main reason for this decision is that I am on a mission to generate $40,000 a month in dividend. Let me tell you what I did this past few days to ensure a $40,000 monthly dividend income. But first, a disclaimer. I'm not a financial advisor, and the content of my channel, including this video, are for educational, information, and entertainment purposes only. Please conduct your own research and proper due diligence before investing. And if you like this video or any video in my channel, please hit that like button, subscribe, and comment. Also, ring that bell so you can get notified when I publish a new video. Okay, let's go. The most recent decision that I made with regards to my high yield dividend fund portfolio is to start moving away from funds that distribute dividends on a monthly basis in order to ensure that I generate a $40,000 a month dividend income. Now, why do I need $40,000 a month? As of last Friday, the total amount of dividend that I have received from my high yield dividend fund portfolio is at 72% of my initial investment. If I can achieve a $40,000 a month dividend income starting next month in October, then I will hit a major milestone in my journey in investing in high yield funds. If I achieve this $40,000 a month dividend income, then I will reach 100% payback in early February 2026. Let's take a look at my portfolio. The current total return of my portfolio is $253,000. You can see in the last column that my initial investment is $575,000, while the total dividend that I have received is at $415,000. The difference between my initial investment and total dividend received is at $160,000. Therefore, if I can earn $40,000 a month of dividend income, I can possibly reach 100% payback by early February 2026. Now, what is the significance of 100% payback? Once you reach 100% payback, then all future dividends are profit. The concept of payback is alien to many who trash high-yield dividend funds. This is what many do not understand when investing in high-yield dividend funds like the funds from YieldMax or Roundhill. When investing in these high-yield funds, the most important performance indicator is total return and payback period. My portfolio's performance is proof that investing in high-yield dividend funds, even with its inherent net asset value erosion, can be profitable if managed properly. Note that my portfolio is inside a traditional IRA, so my tax situation is somewhat independent of the actual dividend that I receive. I pay tax only on the amount that I withdraw from my IRA. Due to this, I considered all dividends I received as return of capital until I reached 100% payback. This perspective allowed me to focus on how to shorten my portfolio's payback period. I manage my portfolio by balancing and modifying the composition of the portfolio with these three things in mind: increase the total amount of dividend, shorten the payback period, minimize additional investment. By diligently doing these three things, I was able to maintain a positive total return for my portfolio, and that 100% payback milestone is nearly at hand. 100% return of capital means 100% payback. Reaching 100% payback will provide me more flexibility in my ability to generate my retirement income and hopefully prevent my retirement fund from running out of money by the time I reach 80 years old. Let's take a look at my portfolio again. I now have only three remaining funds that pay dividends on a monthly basis, namely Misty, Coney, and NBDY. And the reason is that recently I sold AIYY and Tesla. I sold AIYY because its performance is just terrible. Prior to selling AIYY, my total return was close to $237,000, and this is with a loss of a little bit more than $12,000 from AIYY. I have more than 6,000 shares of AIYY, but its performance is really quite bad. The net asset value dropped to all the way to $2.50 per share. So the payback period for AIYY has extended to more than 4 years, maybe even more. This drop in net asset value is causing the total portfolio's payback period to be extended as well. So I cut my losses and sold AIYY to buy more ulty shares. The value of my AIYY holdings is about $17,000 and $500, and the average monthly dividend I receive from AIYY is close to $850. And mind you, this is with 6,000 shares. So I sold all of my AIYY shares and then I turned around and purchased ulty using the proceeds from the sales of AIYY. I was able to buy 3,100 shares of ulty. And if ulti continues to provide a weekly dividend of 9 cents per share, then these 3,100 shares will provide a monthly dividend close to $1,115. So it is much better than what I was getting from AIYY. By doing this, the total number of ulti shares the, that I now own jumped from 59,800 to 62,900 shares. However, if you notice, I now have 65,900 shares of ulti. The additional 3,000 shares is due to a purchase of more ulti shares using the proceeds from selling TSLY or Tesla. I have a total return of $1,500 from Tesla. However, I was disappointed with its recent set of dividends. I have about 2,000 shares of Tesla, and my average monthly dividend was close to $700. This disappointment in Tesla's dividend distribution led me to look for another fund, but this time it has to pay a dividend on a weekly basis, and I found TSYY. I purchased 1,000 shares of TSYY. It is a weekly paying fund from Granite Shares. It sells put options on TSLL, and TSLL is a two times leverage ETF. So they actually sell put options and earn dividend income from these put options. And based on the historical dividend distribution of TSYY, TSYY is providing close to 20 cents per share per week or about 80 cents per month. So I sold all Tesla and received $16,000 100. I then turned around and purchased 3,000 shares of ulti. This month, I received close to $600 dividend from Tesla. With the new 3,000 shares of ulti, I expect to get a dividend of roughly $1,200 a month. So it's almost twice of what I'm getting from Tesla. After purchasing TSYY, I also purchased 200 shares of XBTY. Now, XBTY is another yield boost fund from Granite Shares. It also pays dividends on a weekly basis. Now, I only have three funds that pay dividends on a monthly basis: Misty, Coney, and NVDY. With regards to Misty, I have been watching Misty closely in the last 3 weeks. My total return for Misty has dropped from about $46,000 to $29,000. The rate of net asset value erosion seems to be outpacing the amount of dividends that I am receiving. However, I have several cash covered put options on Misty expiring January 16. And because of this, I decided not to make any decision on Misty till early February 2026. After the expiration of this cash covered put options in January 16th, I will probably sell Misty. Now that at this point in time, I only have two funds that are on drip, YMAX and LFGY. With this positioning, The amount of dividend that goes to my cash account is about 75% or close to $30,000. Yes, close to $30,000 a month is now going into my cash account. $30,000 a month is equivalent to $360,000 a year. This is twice my annual salary when I was working. The remaining $10,000 is for increasing the number of shares on YMAX and LFGY. Plus the contribution of the new Roundhill portfolio, which I think can average between $3,000 to $4,000 a month, then I can possibly expect up to $34,000 a month of income in the form of cash. Now let's take a look at my new Roundhill portfolio. I wanted to have another stream of income outside YieldMax. My high yield fund portfolio is heavily concentrated on ulty. I wanted to diversify outside YieldMax, hence I started my Roundhill weekly pay portfolio. In August, I had one dividend distribution from Roundhill, providing me a dividend of $988. This month of September, my current dividend received is $1,376, and there are two more dividend distributions this month of September. Now, one good thing with this portfolio is that as of the close of market last Friday, the net asset value of the portfolio is up by $1,745. So, so that was last Friday. But today, Monday, it is actually up. My total return is up to almost $5,000. It is $4,727. So far, my Roundhill weekly pay portfolio is performing quite well. In generating retirement income, we should not rely on a single stream of income. We need to have multiple streams of income so that if one falters, the other sources of income can supplement our required cash flow. Now, in about 3 weeks, I will add another source of income. I will reach my full retirement amount for Social Security benefits in October. So I will be filing for it to start receiving my Social Security checks by January 2026. So that's it. I am slowly moving away from monthly dividends, focusing on weekly paying funds. So that's it. I will see you in my next video. If you like this video or any of the videos in my channel, please hit the like button and subscribe and join me in my journey in generating my retirement income through trading options and investing in high yield funds like YieldMax. If you have any comment or question about the no loss method of the wheel strategy or my perspective about YieldMax, please write a comment and I will answer them the best I can. This is Mr. Chris. Thank you, and I will see you in my next video.